Hello everyone and welcome to our next technical analysis review for the Euro US dollar pair. Today is September 10th, 2012 and we are currently looking at price action on the 15-minute chart. And I have this yellow vertical line drawn in dividing last week's trading session from this week's trading session. And as you can see, for the start of this week trading session, price has moved very little in either direction, and it's currently consolidating the gains from last week. Of course, on last Friday, there was a sharp rally in the euro of about 190 pips due to dollar weakness caused by the disappointing jobs report from August. So then, as a result, many investors are expecting the Fed to announce another round of quantitative easing at Thursday's FOMC meeting, and this is what led to the 190 pip rally from the low here at 26.27 up to the high here where it found resistance at 28.17 for about 190 pips. And right now, the pair is currently in a consolidation pattern with very limited trading, but it sort of has a bearish downward bias or downside bias. But this type of movement in the market today is pretty typical, especially after the strong rally we saw last week. And whenever there's little economic data for the day and huge event risk later on in the week, we normally see this type of tight range-bound trading. So this is pretty typical. But for today's trading session, of course, price has been well contained within a 56 pip range with a slight downward bias. And of course, right now we're awaiting the breakout during either the Asian or European trading session. So then, of course, although for me, I'm expecting a continuation of last week's, risk sentiment to continue, upside momentum. For now, we're seeing price begin to slide lower. And if it falls and finds support here at 27.40 and it breaks below this support here, our 200 simple moving average line, then we can expect price to find support at the 27.19 area. Now, if price breaks below this area at 27.19, then we can expect price to fall to 26.85 and find support there. So that can be a target. But if price continues to break below this level of support and closes below, then we can expect stops to be triggered and momentum to continue to the downside and for price to reach the lows from last week at 26.26. So this is if this downside bias, this downward bias continues in the pair. But just like I said before, I'm expecting last week's risk sentiment to continue to the upside with more dollar weakness, especially as we move closer to the ESM ruling on Wednesday and the FOMC statement and press conference on Thursday. So upon a breakout to the upside, if price breaks above this resistance here at 28.17, we can expect stops to be triggered and an increase in momentum, pushing price to test resistance at 28.60. Now, if price breaks above this level and closes, then we can expect the next target to be the 2900 psychological level. So then that's it. That's what we can expect during the next trading session during either the Asian or the European trading session. But that's it for my technical analysis review for today. And I hope you guys have a wonderful trading session. I will talk to you guys later. Okay, then bye.